Morning.
Morning, Gav. How you going?
Yeah, good, good. Sun shining, happy.
Yeah, absolutely. Same up here. Mate, a pretty strong night in the US has given us a solid open this morning.
Yeah, it's hard to bet against that momentum in the US. It's hitting all-time highs and keeps going. I think you'd be brave to jump in front of that at the moment.
Yeah, definitely. It does feel toppish, but you're right. Momentum is really pushing, and I think they are still expecting rate cuts to come through fairly soon. So that lowering rates will probably keep the market on the up.
Yeah, yeah. I totally agree.
Yeah. All right, mate, let's get into what we got ideas this week.
Yeah, I'll just open up this screen here and share that, and uh, there we go. First one's up on the screen then.
Okay. Yeah, so selling some puts. So earlier this week we had UBS come out with an upgrade on Suncorp. Pretty solid target. I think they lifted their target to about 23 odd dollars. The consensus target's around 22.80, so pretty solid support across the market in general. So a trade that we looked at, and I've done for a couple of clients, is selling the $21 puts or 21.01s you've got up on the slide there, and getting sort of around 40, 45 cents. Probably not quite as good as that right at the moment because the stock's had a bit of a jump at the open today. But I think if we get a little bit of a weaker day over the next week or two, somewhere in the 40 cent range for that put would be a pretty attractive price. And buying Suncorp effectively sub $21 with the put premium, I think it'd be a great entry with the bullish sort of comments around.
Yeah, no, that's a very solid one. And the banks are all pushing higher, aren't they?
Look, they are, and it was interesting. Again, UBS came out with target prices or updates on their research targets for majority of the banks. CBA, their target's $130, which seems a little bit unrealistic in the market, but certainly for the other banks, their targets seem a little bit more palatable and probably likely to sort of see some selling come through with these lower targets. So I think for ANZ, their target's around $30 a share. Um, Westpac, it's about 36.50, and NABs, I think their target's around $39. So what they're suggesting is that there's probably just a little bit of money to come off the top. So we've sort of taken the view that it's probably a good idea to sell covered calls for those that own the banks. And or if you don't own the banks but you want to trade them, you could look at buying a put spread. So classic example in ANZ, stock's just on $33.15 at the moment. You could buy a $33 to $32 put spread. That's around 36 cost to do that. That would be a pretty attractive way to set up a potential downside move in the stock, which could net you about $6,000 profit if we get the full move.
Yeah, I think even if you own the shares there and sold the call and bought the put spread, you're actually in that trade for a credit. So it's a pretty solid trade, that one.
Yeah, definitely. And the put spread could sort of be used as insurance against the shares that you own, and
Yeah.
obviously selling that covered call, get some income in. Look, I know we're coming into dividends in November, so something to watch. But it does feel like the banks could just ease off a little bit,
Mm.
as maybe we see a bit of money move into resources.
Yeah, I'd agree with that. One we discussed earlier in the week was AGL.
Yep.
It took a bit of a beating during a reporting season, but mainly because it invested in a lot of infrastructure like batteries that won't start to generate a return for another good year or so. So its earning per share
Yeah.
dropped, but it's still a solid company. It still pays a solid div. I think buying it around this price, if you were happy to hold it for a couple of years and just collect the div, it's 100% franking at the moment as well. So you could sell the 851 puts for October. You're going to get about 22 cents for it. I
Yep.
think that's a pretty good entry point given its outlook for the next 2 years. I'd feel pretty comfortable doing this one as well.
Yeah, definitely agree with that. I think AGL is a bit of a, sort of taken the pain, and you're right, that battery asset they're sort of focusing on will be a slow pay or slow reward for them. But once it starts to kick in, I think you really see some upside in the stock. So be looking for sort of north of $10 in sort of 12 months. So perhaps pick the stock up if we can. Otherwise, we'll just bank the premium and be happy to keep chasing it.
Yeah, particularly while it's paying a solid dividend like that with 100% franking, it wouldn't look out of place in a portfolio, that's for sure.
Yeah, definitely, definitely. Right, mate. Well, that's it for this week.
And talk again soon.
See you, mate.
Yeah.